guys, the guest is coming on. That's why you heard the music. And here you go. Take it away, Lucas Jacobi. Let's go.
Here we go.
Austin Henning. Let's go.
All right, Justin, what's up, man? Welcome.
Hey, how are you guys? Really nice to be on the show. Thanks for having me. I really appreciate it.
Absolutely. What's exciting in your world today?
The stock markets. So as you guys probably know, like the stock market's pretty spicy today. We have a pretty strong snapback, and I think that the volatility is really adding a lot of opportunities for people. Just before we start, I wanted to say thank you for inviting me to the show. I know that I've been personally watching Benzinga for a while, and the way that I first got introduced to you guys is through the cannabis space where you guys are hosting those cannabis conferences. So I went down to Las Vegas, and I had a really good time, I got to say. Got to meet a lot of really interesting people. And I got a lot of value out of that. So I got to give you guys kudos for that. Second thing I just want to say is that it is extremely difficult to find YouTube channels which are actually trying to add value. So what I personally find is that clickbait really works. And I really value that you guys are not really going down that path because it's an easy way to get an audience. But for myself personally too, like we're coming on our 3-year celebration for our channel on March 14th, which is going to be Sunday. And it's been a slow and steady race for us to build up our audience, but it's been really rewarding seeing the engagement we get. So again, I value what you guys do too, because you guys don't really do the pump route. So thank you for that. And thank you for creating a channel that adds value.
Awesome, man. And those cannabis conferences, we're still doing them virtually. I'll drop the link in the chat so everybody can check them out. But I appreciate you bringing it up.
Did you ever come to our Miami one?
I just went to the Las Vegas one. I did not get a chance to get out to the Miami one, but I'm sure it was equally good.
Better. It always gets better a little bit. It's like we're like Benzinga's like a fine wine. We age with time and we get better with time. That's all.
So you're like a fine whiskey or a fine wine.
Sure, whatever. Yeah, just fine. We're just fine.
Yeah. So like, what's exciting for you guys today?
Well, of course, any day where the NASDAQ is up almost 4% and SPY is up 2%, it's hard to lose money. So some of our stocks that got hammered last week, especially some of these crypto names are running for us. GameStop is of course exciting to watch again. So, and we have Roblox tomorrow. We just talked about too. So it's some good stuff this week.
Yeah. Everyone's talking Roblox.
Yeah. And, so I have to say that, it's really interesting where we're at in the market because we know that we got the stimulus bill coming up. We know we got Jerome Powell coming up on the 17th, which is going to be next Wednesday. And I think the market's really queued up to go a lot higher. So we have a service called Blaze Tips. It's an algo platform. And we're basically getting like an all clear that we're going to be taking a massive higher. I think SPY is going to be going for 400 here. And we're already seeing that start
baby,
today,
all-time high.
Yep. And as we know, like the S&P can't rally without tech stocks. So it's really nice to see that tech is participating in the rally today.
Yep. And you threw out the 400 target on S&P 500 SPY. I'm curious, what are some of the factors that go into the algorithm?
It's proprietary, so we can't tell you exactly what goes into our secret sauce, but we're looking for early reversal signals. So when a stock has a major cut lower and then shows signs of early reversal. So as we know, like the S&P has been a little bit volatile lately. So with those major cuts down, when it starts to reverse back up, that's what we're basically looking for. So we're looking for deep cuts, early signs of reversal, and then it starts trending up. And as we know, like the market's had quite a bit of chop lately. So it's provided an opportunity for us to get in.
Yep, absolutely. And let's hop over to some individual names. You know, what are some of the trades that you guys have made recently? What are some things on your radar, et cetera?
So we have a pretty diverse group. We trade pretty much everything. I think we have about 550 people inside of our Slack community. So like there's literally idea generation like all day, every day. But the main thing, the way that we got started, we used to be called 420 Capital. So we rebranded to Blaze Capital after we shifted away from cannabis stocks. And it's been very fun to watch the entire sector go. So since we shifted our focus to being non-cannabis, we're really focusing on a lot of tech names. So that would include like Tesla, Apple, the NASDAQ, names like Cloudflare. Those are ones that we really like. And then like other stocks that are doing really well, which are more boring, it could include like bank stocks, energy stocks. And I like to trade the S&P personally because I feel like I got a really, really good pulse on it. And I track that thing all day. We call the S&P the Niagara Falls. So if you don't know where the Niagara Falls is flowing, if you're going on the wrong side, you're definitely going to get hurt. So yeah, some of the big. So we actually some people in our group traded through the GME and AMC, the hype and the big moves, and we've had some people who have made life-changing gains on that. So it's been really fun to see that we have really good engagement and really good ideas being shared. And the best thing about this is that it's not me generating all the ideas. So even though I started Blaze Capital and I'm the founder, everyone in our group really shows up every day to provide really good ideas. And that's what's been really rewarding, is that we've been able to collect people who were like-minded, who were looking to work together and looking to conquer the market, because as an individual trader, everything is stacked against us. We don't have an edge. We don't have an edge for information, for money, or for direction. So by having a collective of roughly 500 people, it's been really rewarding to see how people are presenting ideas and how they're doing well. Like one specific call out that people have been in recently is IQST. And that was a member-generated idea, and like they participated in a huge part of that move. So they did the due diligence, they liked the stock, and they bought it collectively. So that one's been really good for our group.
Yeah, wow, and I don't even know that one. Let's see. What is this?
That one's. I think that they're like an EV company. I believe they're doing something with batteries, and like they recently had like a news release about they're looking to expand that. So. That's one. And then if I have a look over here in the options channel, which we have, I could give you some ideas like what Ellen's been doing.
Yeah, let's hear them. We love ideas.
Yeah, I'm just curious here. I'll give you some of the stocks that I like for this week. So I like Cameco. I like CCJ. It's a stock that I've been liking for a long time here. And that is a uranium producer. Okay. And I've been tracking that one since it was at about $10. It comes from my home province in Saskatchewan, Canada. Part of the reason why I know the company really well. And the stock has been on an absolute tear lately. So that one's been really, really good to our group as well.
And so when you're saying you like this one, we have a 1 year chart. Maybe we should zoom in. Here's a 1 month chart there. You know, what are some of the things that you're looking for? Like what makes you bullish on the name? Is it something in the chart? Is there something else you like on it, etc.?
I like a few things about it. So they're one of the largest uranium producers in the world. And as we're looking to make a shift towards more sustainable energy, again, nuclear is something that people generally don't like, but it is generally more efficient when you're doing energy. So that's part of the reason why I like it. And then again, with political uncertainty, there's always a demand for uranium. So those are probably the two most bullish catalysts. And then Michael Burry, the famed short seller from the Big Short, he also really likes Cameco. So he came out with a bullish note on the stock and on the sector and on the commodity, and had a pretty nice move higher on his comments as well.
Okay, there we go. Cash register for that one. Ringing it out. We have sounds here too. We got air horns. That's my favorite. It's very mixed in the chat though. Some people love the air horns, some people hate it. If you guys like the air horns, hit the 1. If not, hit the 2. And of course, everybody hit the like. But all right, so this is an interesting one, and it's less of a swing trade, I imagine, and more of like a long-term holding, just based on strength in the sector as a whole, and then this stock in particular.
Exactly. And if you look at the monthly chart, the stock has been absolutely pummeled over the last little while. So it's starting to make a comeback here, and that's what I'm watching for. So like if the stock is able to claim, I believe it's. Let me just have a look here on my chart. I believe it's $16.
When you say the monthly chart, you want us to look at a month or monthly candles?
Monthly candles, please.
All righty. There we go.
So I'm looking for a break back above $18. So if you zoom out a little bit more, I'm not sure if we can zoom out a little bit.
Go more.
Like all the way back to
here's 10 years. Yep.
There you go. So we can break back roughly back above that $18 area. I see a big cup forming. So back above 18 is where the squeeze really starts. And I can see us making movement back up towards, call it like $25 after that. We got the 200 DMA to battle with. 200 monthly moving average at about 21. And I think a short-term target would be like about $20 and then 25 for the longer term here.
All right, there we go. Boom, dropping an idea. Cash register again. And shout out to ZingerNation. Everybody said they like the air horn. Nobody put in the 2 that they don't like it. I love you guys. Not only you let me do this, you let me use my air horn. But sorry, keep going, Justin.
One of the stocks we really like is I'm going to give a shout out here to Mason, one of my staff. It's Team. So the ticker is TEAM, and they have a product called Trello, which is something we really like using. We use that all day, every day, and this stock has been on an absolute tear. So one of the reasons why I like the stock is because I'm a user of the platform. So I'm a user of the platform. I like what they have. And that's generally what I'm looking at when I look at stocks. I'm generally looking for three things. I stole this from Margus Lemonis. He is from The Profit. And generally looking for three things. We're looking for people, process, product. If you have the best people, but your process sucks and you have a bad product, it doesn't really matter. So you have to have good people, good process, and good product. And by being a user of the service, I can understand what the business model is and how the growth is going to be reflected in the share price. Another one that I really like right now is Asana. Asana is going to be reporting earnings later this week. It's very similar to Zendesk. They're basically a CRM service. And I think the stock has a lot of potential. It's still a recent IPO. It's making a snapback right now. We still have a head and shoulders here on the daily chart. But the one that I'm really watching here
and
is
this one,
Zendesk.
I'll say, at Atlassian, we're a customer of that one. Asana, we're a customer of that one. Here's our Benzinga Asana board.
There you go.
Earnings, there we go. Wednesday after the close, tomorrow.
Yes. So if you have a look at Zendesk, just for comparison, a company that does a very similar service, the stock has been on an absolute tear. So that's what I think is going to happen to Asana in the longer term. One other stock I can pull up here that you would appreciate is Upwork, UPWK.
Jason Raznick favorite. Here's a nice 1-year chart of Upwork. Beautiful.
Are you shorting it?
No, I'm not shorting this. This is another service that I use. It's where I find some contractors. It's very similar to Fiverr. So this stock is now no longer in my portfolio. I was trading it when it was around the $10 range, and now it's a little bit higher. But again, same thing. I'm comparing it to Fiverr. If you have a look at the Fiverr stock, that one has basically had an absolute monster move. It went from about $25 to almost $350. And again, what I'm trying to just do is look and see, is there a comparable company which has had a mega oversized move higher? And can the company do something similar? So that's why I'm looking at Asana. And again, Upwork, I was predicting it was going to have a similar move to Fiverr. And if you don't know what Upwork is, it used to be freelance. So like freelance.com, where you could hire freelancers to do ad hoc work. And through here, I've actually found my personal graphics designer. I've also found my web developer and some other people for odd jobs. So it's a really good service. And like as we're shifting more towards work from home, that's the reason why Upwork's been on an absolute tear lately, is because they're providing a service that more people realize they need. And the benefit as well is that when you're hiring a contractor, there's no overhead costs. You can hire someone like my graphics designer is ironically in Egypt. So she lives in Egypt, but she's the best designer I've ever found. And she does all of our branding. She created our logo. She helped redesign our website. And so again, a service that I use. I like the stock, and it's making a really, really big move here.
Yes. And I love you. So you just dropped us 4 ideas. 3 of them, Asana, Upwork, and Atlassian, were Benzinga's customers of. So similarly to you. We're not in the uranium stock yet, the CCJ. I hope that we're never in the uranium stock as a customer, but we'll leave it TBD. But yeah, I mean, our experience with Upwork has been equally amazing, right? It's so easy to find amazing people, spin them up. I mean, so some of our longest term builders here at Benzinga have started off with, hey, we need help with the development project, and they're amazing. They love the business, they love the markets, and they just continue to build and grow with us. We
spent over 400 to 500,000 with Upwork. And Upwork used to be Elance, which was Odesk. Odesk and Elance merged to create Upwork. They got rid of the Odesk name. They got rid of the Elance name, which had the best UI back in the day, like 8 years ago. They merged to create Upwork, and now they're really only competition in the game. There used to be Guru.com, which could still be around, and then there is Freelancer.com. And then there's TopTail, which is your more expensive offering.
Yeah, so I think they amalgamated freelance into Upwork, so they rebranded. And again, like if you've ever been any kind of if you run a business and you're looking to hire like people for freelance, like freelance.com has been a really good resource. I think the rebranding really helped them. And I'm just putting this out to people in our Slack group here for some of the ideas that they like. So one of the stocks I've been watching really close as well is DocuSign. The reason why I like DocuSign is because the rate of adoption. So the rate of adoption is going to be a little bit later than what we saw in ZM. ZM is very easy to understand. You click and start a video. You can chat with anybody. DocuSign's a little bit more complicated, but a very strong work from home stock as well. The issue that we have right now getting into tech stocks is that they're a little bit out of favor right now with yields up. So I really like the long-term prospect of DocuSign just because, again, I'm a user of the product. I think that more people are going to realize they need this product as we continue to go into lockdown. And I think that ultimately it could have a similar move to ZM in the longer term, just because it's something you need. Like other reason why I really like this is because if you think about the cost of business to send documents around the world, have people sign them, not get them back in a timely fashion, this gets it done in a couple clicks. So product's a little bit more complicated to use, just like Slack. Slack is, in my opinion, it's better than Discord, but the learning curve to learn how the product works is a little bit higher. So as people start to be more
Wait,
willing
are you
to...
saying Slack is harder than Discord or easier?
Slack is harder than Discord because Slack has... So Slack out of the box...
I have such a hard time using Discord. Call me a boomer.
I hate Discord. I have a personal dislike for it that's strong. The reason why I don't like it is because it's mostly chat based. So I think the reason why a lot of like stock market communities use Discord is because it's free. They're too cheap to pay the it's like $7 per user per month or $8 per user per month, and you get limited functionality with that. So one of the things that I really like about Slack that recently got bought by CRM, which actually our algo called too, is that we can thread. So there's the ability to do threads, and the second thing that I like is that they have an API. So you're able to actually pipe in other services directly into Slack. So for example, inside of our Slack group, anytime someone signs up for one of our services, we get a notification in Slack in our support channel. So I don't have to go check my email. I don't have to know when people sign up. It literally happens right there. We have Stripe integrated into Slack. We also have Trello. So anytime a task is due from our team, I don't have to go onto the Trello board to know whether or not someone completed their task. It's updated automatically. All I have to do is check Slack. So Slack is really our HQ. And we just pipe in other services into Slack, and everyone can see what's happening.
Another one that Benzinga is a customer of, just like DocuSign. And I want to throw this one out to ZingerNation, guys. This is the battle of the day, right? We've been talking about stocks and opinions, up, down, whatever. The real battle of the day was I see some arguments happening. If you guys think Slack is easier than Discord, press 1. If you think Discord is easier than Slack, press 2. I'm going to be counting this one very closely.
And if anybody's here from Blaze Capital, I'd really appreciate some thumbs up. Let's get that thumbs up smashed here. Come on, we only got 200 here. We got almost 900 people watching.
That's lame. I mean, people are sleeping this week. I mean, last week was tough, right? We had a bad week last week. Everybody in the market did. But I mean, we're having a better week this week. Let's get some positivity flowing. We single-handedly turned the market around on Friday. We were just, we're like, all right, we're getting our asses kicked. We're all just going to smile. And everybody is saying, not everybody, but 80% of the group is saying that Discord is easier to use than Slack. All right.
So. Yeah, because it's free, right? That's why it's free. They're like, well, I'm going to talk up the product that I use. So I use Discord, so Discord's easier, right? It's a pretty polarizing discussion between the two because, again, the Discord group is pretty strong. Like they're very strong advocates. So nothing against them, but again, I got to say that Slack rules and Discord drools. Sorry.
Awesome, man.
Another one I want to call out here really fast is SNDL. So SNDL was a stock that we actually had a really nice move on, but we got out early. So what we were looking to do was try to predict what stocks were going to make it onto topstonks.com or on the Wall Street Bets forum. And there's this website that I found recently called topstonks.com. I'll share that link in the chat here. And basically what it does is that it provides, they aggregate data in terms of what's being posted on Wall Street Bets and on 4chan. And they aggregate that data and basically tell you what are people talking about, what are they buying. So we're not looking at individual posts. We're just looking to know where's the most activity. And what we can note is that when we had the mega move from like GME, AMC, there were some individual MJ names which are doing quite well, like Tilray, Sundial. So that Sundial trade worked out really well. I think some people made up to 1,000% off the options that we purchased. And so what I don't like about Sundial is that it's not a fundamentally strong company. So when I look through the filings, they got some problems. But the saying that we often use is that, would you rather be right or would you rather make money? And I think that a lot of people don't want to ever look at these names because they're like, well, I can't make money on a bad company. Hey, money's money. If you want to get paid, if there's an opportunity that gets presented, then jump in and make the money. It sounds simple, but it's something that's been very difficult to teach people.
Yep. Yes. I mean,
And
sometimes
actually,
being right feels good, but yeah.
do you
when
know
you get your ass
do you know
kicked, it
this?
doesn't feel good. What did you say?
Sorry to cut you off, Luke. Do you know what the stock market psychology chart is?
I don't know that one. Nope.
Just
Teach us
Google
about
it really fast if you don't mind.
All
Just
right,
Google
let's
it really
do it.
fast if you don't mind, because I think there's a really good part we could bring up here. Because what I've realized by doing the streams with more people coming on is that people are often falling trap to the cycle without even being aware of it. You want to click on the
You
one
said
that's the
psychology or
top left
cycle?
one there, yeah, top left one there.
All right, let's zoom
And
this in.
that's, if you compare that to Tilray, you compare the original Tilray move. If you compare that to GME, you compare that to GameStop. What I've basically been telling people is that when the chart matches up, you're more likely in the pattern, whether you realize it or not. If you see that, so there's two things I'm looking at here. There's the technical chart, meaning if we go all the way up on GameStop and we had that dead cat bounce and then we pop back up for a head and shoulders, unless we break that shoulder, it's not a buy anymore. And when you're looking at the comments online, what I personally noticed is that it looked like we were getting very euphoric on GameStop around 500. Additionally, the comments we were reading online were very euphoric. I'm a genius. We're all going to get rich. I'm going to put a billboard up on New York that says GameStops, right? So when the actual messages align with where we think we are on the chart, it gives us an unfair advantage. And this is how we were able to help people throughout the GameStop, AMC, Sundial, Tilray. We were basically able to tell them that take a step back and just ask yourself, what are you telling yourself in your head? It's time to get fully invested. It's time to buy more on margin. Or am I going to tell everybody that I'm smart and rich? I'm a genius. And on the later part of the chart, as we're going down, the comment that I've been seeing more frequently than any other one is the one under denial. My investments are great companies. They're going to come back. So we went through an example on NEO last week when NEO was trading at roughly 45. And again, the comments were, well, NEO is a great company. They're going to come back. NEO is a great company. NEO is a great company. That's how they're rationalizing it to themselves. And then they're actually selling when everyone else is selling. So then we get down to panic, right? Shit, everyone's selling. I need to get out. And then where do they actually sell? They sell at the bottom. They sell under capitulation. And the easiest way to explain
this anger one. Who shorted the market? The government let this happen. It's the market makers that are against me. Yes, I love that one.
Did that happen with GME and AMC? Were people asking regulators to step in and do something? I think that happened, right?
I'm not a cat.
So people got angry, depressed. Ironically, when you see the comments online, when people are angry and depressed, that's when you want to buy. It's a contrarian indicator. And the last thing I would just say is that our algo also called GME at $3. So what we're generally looking for, the easiest way to explain this is between anger and depression, you can see that we get an all-time low. So we get an all-time relative low there. That's basically what our algo is looking for. We're looking for a huge move up, some deep cuts back down, but then the sign of early reversal. So we called GME at $3. We called AMC at, I believe, 2. It went to 20. It called like pretty much all the stocks that have moved substantially higher. And that's what I really found is that people really want to, so when I said people want to be right versus making money, people want to be right and get paid. So they want to buy GME. They're like, well, GME is going to be the next online retailer disruptor, blah, blah, blah. And I also want to make money. So they're unwilling to sell when they should be. And they're having a really hard time. So what our algo tries to do is that we serve up ideas. They're not guarantees, but they're ideas. And as a rule of thumb, the algo has been better at predicting bottoms than individual people. And the last thing I would just mention is that there's something called the Drunken Cougar effect. So the Drunken Cougar effect, basically, like you know what that is too, right?
No, I don't know this one, but I like the way that it sounds.
So the Drunken Cougar effect basically means that you think you're smarter than you are. So beginner's luck in the stock market can actually be a detriment because you start to learn bad habits. You're like, well, I'll just average down, right? I'm losing money, but I'm gonna average down and buy more. And then by buying more, they actually get rewarded for bad behavior. And the reason why that's not good is because the market right now is very fueled by liquidity. So it's a liquidity-driven rally, which means that when things are hot momentum names are going to do the best. But when things start to turn down, those high beta names are going to underperform. And what a lot of people are just not prepared for is actually being wrong. So another thing that we teach and we try to advocate for is to expect you're right. So if you think that a stock is bullish or you think it's going to go a lot higher, expect you're right, but be prepared to be wrong. And then finally, be ready for a surprise. So like going into the close yesterday, everyone's like, oh my God, tech stocks are bearish again, right? Oh, well, yields are up, tech stocks are bearish. They slammed it down. So people bought into the open yesterday. They probably got flushed out into the close yesterday. And now they're probably going to chase it back today. So what happens is that people are not legitimately prepared to actually be wrong in a security. They're just blindly buying. And what we advocate for is a simple 4-step process. It sounds really simple. It's 4 steps. So create a watch list of stocks you want to buy, wait until they provide a favorable entry, validate that there's still actually a good buy, and then make an actionable trading plan, meaning what's your risk reward? If I'm risking $1, how much profit could I make? 10 cents, 20 cents, $2? And a lot of people just don't realize that they're getting into bad trades, meaning that they might be risking $1 to make about 50 cents. So if they're right, they make they make 50 cents. If they're wrong, they lose $1. And over time, if you just flip a coin, the law of averages is going to work against you, where you're going to lose a lot of money. So the market is difficult. That's what I think a lot of people don't fully appreciate, is that trading stocks is tough, and it takes a long time before you've developed what your edge is. So last thing I'll just mention here is that when people are watching other people on YouTube, myself included, they think that, oh, if I just copy what Justin's doing, or copy what this channel's doing, I'm going to have the same success as Justin. That's not true. The reason why I say that is because we're not all looking for the same opportunities. We have different personalities. And frankly, like we're just not looking at the same stocks. So the analogy that I've used before is like, pretend you're playing football. You think you want to be a quarterback, but when you show up on the field, you can't throw the ball. Well, if you can't throw the ball, you can't be quarterback, but you can still be a football player. So maybe you're going to be a wide receiver. Or if you're not good at offense, maybe you're going to be on defense. Maybe you're going to be a safety. Maybe you're going to be a linebacker, meaning you're going to go short. And like everybody wants to be the quarterback. They all want to be the guy who makes the big trades, makes the big calls, but might not always be the best opportunity for you. One more analogy to try to make this sink in that I've been using a lot lately is as traders, what we want to have is a tool belt. We want to have a tool belt of tools we can use to try to make money. And if the only tool you have in your belt is a hammer, every problem you see is going to be a nail. Oh, that's a nail, right? You're going to use a nail. You're going to think that everything you have is a nail. You're going to try to hit it. However, if you see a screw and you try to hammer it, well, I think we all know what's going to happen. It's not going to work. So at a certain point, you need to realize that the tool I'm using is not right for the job. I need to get a drill. The drill is going to do what you want it to, but if you don't have that tool in your toolkit, it's going to be very hard to actually capitalize on it. And the last thing, one more analogy, just to make sure I can wrap it up here, is I think what a lot of people are trying to do is they think that I don't have the right broker. If I had the right broker, I would make money. If I only had that one right stock, I would make money. No. The analogy I use here is that people are generally trading options on weeklies. And the analogy there is pretend you've never ridden a bicycle before. So you've never ridden a tricycle, which means it's very hard to fall off. You've never ridden a bicycle, and they're trying to jump onto a crotch rocket, right? Oh, okay, well, I'm going to jump onto the crotch rocket. I know exactly what I'm doing. And what people think is that all I need is the right helmet. So Justin, tell me what color helmet to get. It's pink, right? If I get a pink helmet, I'm not going to get hurt if I fall off. Or I'm not going to wear a leather suit because I'm invincible, right? I'm never going to be wrong. I'm never going to get hurt. And that's a trap that people often fall into. They think that, oh, well, I don't have to learn how to trade stocks. I don't have to learn how to go short before I buy puts. They just think that whatever I do is going to be good because I'm smart, I'm a genius, and I'm never wrong.
There we go. Awesome, Justin. I love it. So you know, the whole point of this show is to get the ideas flowing. So you not only dropped 5 ideas on us, so we also got the market psychology lesson. Tons of positive comments in the chat. So where can people stay in touch?
I have a YouTube channel, so you can find me under Blaze Capital on YouTube. You can also find us on blazecapital.com or on blaze.tips. And we have a free trial on our group if anybody wants to come join us. And we also have a free algo alert you can set. So if that sounds interesting to you, you can head over to blaze.tips and you can set up your free alert. And the reason why we offer things for free is because when I was first getting started in the market, I had so much difficulty. I did not know where to go to get resources. So what we try to do is provide all the tools that I wish that I had when I was getting started. Because like I said, I really struggled. And a lot of people on the internet only ever talk about their successes. They never actually talk about their failures. And what we can do as traders is try to learn from other people's mistakes so we don't make them ourselves. So it's not sexy, but for the long-term viability of your account and being a trader, you need to be aware of where you're good and where you're not good. So we call those blind spots. And by having a really strong community on YouTube and a really strong community in Slack, we're all able to like tell each other, hey, you might have missed this you might have missed this right here. So you think the stock's going to go higher, but maybe you missed this one thing here. So we're able to help each other.
Awesome. Justin, thanks for joining us. Nice having you here on the Power Hour. One more air horn. There we go. All right. And we'll have you back soon.
Thank you.